tradingstrategy.com.
Hi, this is Chris again, looking at the upcoming Wednesday, October 1st trading session. I have the economic calendar in front of you as per. China is off for a holiday, so National Day, so Asia might be a little bit slow, but really we don't see anything of consequence until we get down to Europe. The German manufacturing PMI anticipated to come out at 50.3. Should have an effect on both the euro and the DAX. The higher number, the higher the assets go. Same thing in the UK. We have manufacturing PMI coming out, anticipated to be 52.5. Same thing. Only this time it's going to be the FTSE and obviously the British pound. A little later in the day, we have the ADP Nonfarm Employment Change, anticipated to come out at 210. And 210,000 added for last month gives us a general vibe feeling on the non-farm payroll numbers that come out on Friday, which of course is a major market moving event. So this does have an effect on both the US dollar and the stock markets in general. Typically, it's more a matter of, is it really high? Is it really low? It's not as scrutinized as non-farm payroll, but some people try to get in ahead of the numbers on Friday with that. A little while later, a couple hours later, we get the ISM manufacturing PMI number coming out of the United States, anticipated to be 58.5. That will have an effect on both the US dollar and the US stock market. So it appears that this is going to be a fairly straightforward day where we're looking at the pound, the FTSE, the DAX, the euro, and the US stock markets. With that being said, you can see that the euro did in fact fall during the session here on Tuesday. We bounced a bit, so we feel that this market could be one that offers put buying opportunity once we get a little bit more of a bounce. The 127 level should still be resistive, so really not looking for anything much in the way of rally, and we think rallies honestly are to be sold into via puts. Over in the British pound US dollar currency pair, you can see we didn't do much, just basically hanging around 162 on Tuesday. If we can get above 163, we are buyers. Below, we're not as excited because we see it as being pretty supported just below current levels. So really, even though it is in a downtrend, we think there's less room to move to the downside. So we'd be buyers of calls above 163. Beyond that, probably will ignore this market. Looking at the FTSE, you can see that we did in fact form a hammer yesterday, but with that we also recognize that during the day we broke down below that and ended up getting rid of that hammer and breaking all the way down to 66, an area that should be rather supportive. So we're looking for a supportive candle based upon some UK numbers coming out. The manufacturing PMI could turn things back around, so we'll pay attention to that announcement on a supportive candle on maybe an hourly chart or something like that. We'd buy calls. We feel that this market is getting a bit oversold. 65 should continue to be supportive as well. As you can see, the DAX fell to 9,400, but did find support there. We are still in consolidation between 94 and 98, and that's pretty much how we see it. A move above 9,500 has us buying calls and aiming for 98, probably 97 first is where we will stop though, but 98 will be the longer term target. And finally, you see we're just kind of meandering around in the S&P 500 during the session. We're looking for a reason to go higher. A better than anticipated ADP number or ISM number could be that, and we would buy calls on a better than anticipated announcement with an idea of moving to the 2000 level, possibly even 2020 given enough time, but 2000 will be the immediate target. 1950 is still the floor in this market as far as we can see. And with that, I'm taking a look at the Wednesday, October 1st trading session.